Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at today's Nifty chart that is from May 5th, 2023, and see what kind of entry and exit signals the strategy has given. Let's have a quick look at the charts. Great. You're looking at the Nifty chart, two-view chart on the trading view, right? We have the Nifty spot on the left, Nifty futures on the right, and both these charts are set to a 3-minute time frame. So I have the three indicators now, because of which I call this strategy as triple threat, right? And so because we have three conditions to enter into a trade and exit a trade, right? And these three conditions are derived out of these three indicators in conjunction with the price action patterns and the candlestick patterns as well. Okay, so before I bring these custom indicators on, let's look at the price action for today. Okay, so the price gap down, as you can see, it's a huge gap down, right? And then price quickly, moved to higher levels. It almost went to yesterday's close, almost close to yesterday's close, right? As you could see, and then price saw a severe selling pressure from the top, and it broke the day's low, as you could see, and then actually price was reversing back again, and kind of making a lower high, right? And then from that point onwards, price was moving, trending slowly to the downside, making lower highs, as you could see. So it's quite an interesting day, and from this naked chart without any indicators, I could see a lot of opportunities, especially for people who are day trading, right? These intraday moves looks quite tempting, but no, we cannot capture every single move, right? Unless you are a gambler, where you take your chances with every single dips and every single time that the price raises to a certain level, right? So that's not how we trade, and hence, we have these three indicators, which is going to bring structure and order to our trading, kind of behaviors, right? So let's turn these indicators on and see what how the same chart looks with these indicators, and how do we plan to enter into a trade and exit out of a trade based on the signals, you know uh, given to us by these indicators, along with the price action analysis, right, and the candlestick patterns. Okay, so these custom indicators, I have discussed enough about these indicators in my previous videos, right? The first indicator being the price levels, or I call it as locations, right? The second indicator being market participation, or market participants, right? And they are represented by these dots. So we have three colored dots: the black, blue, and green, and each of them actually denotes a certain kind of participant entering the market. And then we have the trend meter, which actually indicates the strength of the trend, right? So these three indicators have equal importance, and based on how these three indicators behave, we then read the charts and we take trades. So let's quickly look at the same chart with these indicators now applied, right? It's a gap open. As you could see, the price opened way below the CPR, the central pivot range, right? And post the open, the price swiftly moved back towards this central pivot range. You could see it's a wide CPR. Whenever it's a white CPR, right, it denotes that the previous day was a trending day. Okay, so let's quickly move to the yesterday's chart and see. It was a huge trend to the upside, right, since the open, and we have discussed on this particular chart yesterday and how the price action was and all of that. But yes, look at the price opened lower and closed way at the top, and hence we have a wide CPR, right? And usually, the CPR actually, people who read the CPR, people who know how to read the price action based on CPR, would say that on wide CPR days, the price action is going to be range bound. But today is not a usual day, right? Hence, it's very important that you understand the price action patterns in the context of how the price opens on that particular day, and you cannot generalize a concept. So, this wide CPR does not all the time mean that the price is going to be range bound. It's going to be actually moving in a shorter range or within a range bound, right? And it's not going to be a trending day. No, that concept does not apply always, and especially today, it is a gap down open, and it's not a usual day where this conditional white CPR can be applied, as they actually mean to. So today, this white CPR has no significance. It's a gap down, and usually on a gap down, right, if the price moves in the direction of the trend, in which is like moving towards the moving downwards, post a gap down. So that move will not sustain, and there will be buying pressure at the bottom, and usually the price will go up. That's 8 out of 10 times, right? And there are days where the gap down, post the gap down, that or a gap up, right? The price significantly moved in favor of the gap and moved lower during gap down days, and moved higher in case of gap up days. But no, 8 out of 10 times, usually the reversal is quite obvious, during gap opens. So today, what happened was the price opened lower, below the CPR. Look at the moving averages, right? It is all flattened. It was all raising to the upside yesterday, but due to the it's a huge gap open. It's 100 points, a gap down, right? So it's a huge gap open. So the moving averages are flat, right? As you can see, the larger frame moving average is flat, absolutely flat, the black moving average, and the price swiftly moved. And when the moving average is flat, it will not act as a strong resistance, right? The moving average will be breached in most cases, and that's exactly what happened. There was a strong buying pressure post the gap down. The price moved above all the moving averages. Like I said, when the moving averages are all mixed up and they're all flat, they have no significance. They can be easily breached. And having said that, no, this parabolic move to the upside post a gap down, right? It is also another bigger question. So, based on my experience, looking at the Nifty charts for years, I could say that this move to the upside is a weak move. As you can see, there are not much of volume or participation that came along the way when this move happened right from here, almost above the CPR. So when this happened, right, look at the trend meter on both these charts. Okay, this trend was almost flat, and towards the end, it suddenly moved towards the red zone. Okay, while the price did not make a huge move right from where it moved above the CPR and to this point, right? And likewise, on this particular chart, you could see the same point the price moved above the CPR, right? It is into the red zone at this level. And post this level, when the price moved higher, the trend was kind of sloping downwards. So this is a clear indication of price trend conflict. So this price trend conflict, I've discussed enough about this particular pattern, right? So when you see this, it's quite obvious that the momentum to the upside has weakened, right? And the price was moving higher, but the trend meter was actually moving lower, right? And this is a conflict, clear conflict. And look at the current days. It's a post a gap down, parabolic move above the moving averages, and this particular move, right? This big red candle. Now this is sort of a consolidation right here with no volume. The price is moving higher, while the trend meter was moving lower, and this one red candle that is pinning all these three moving averages, it is one of the five patterns that the entry setups that I discussed in the webinar. So we have five setups, based on which we actually read these signals and take trades. So this is one among those five setups where we have a big candle that's pinning all these three um, moving averages post a consolidation while the trend is weakening, and this is the candle that we put our money on. So this is our first trade. Look at the trend meter; it's almost at the red zone, right, and it's moving downwards. The trend to the upside has weakened, and that's clearly indicating that the trend to the downside is really strong, with this volume candle coming into play, pinning down these three moving averages. It's a beautiful setup, and we're going to take a short position right here, right? So this is going to be our entry, and this is going to be our exit. The top of the candle is going to be our exit, and look at the kind of reward you're going to get. So this is going to be our target. You could trail your stop loss to the green moving average, but no, this move was certainly very huge. The risk was about 23 points, right? And the reward was about 85 points. So it's about 1:4. and this is your first target, you could always look at the trend meter and take your profit. So in this case, the trend meter on both these charts moved into the green zone, indicating that the price is into oversold territory. Look at the price; it is at the day's low, right? And in this case, it even moved below the day's low, and it is at the support. So it's a key location on both these charts. The trend meter is indicating that it's kind of oversold, and look at the participation that has come in at this point in time. So this is a clear indication that we need to exit out of the trade based on the same conditions we entered, right? Location, participation, and the trend. The same conditions when we exit as well. Look at the location, look at the trend meter and the participation, right? So you take your profits right here. You know that post this move, the price is going to retrace back to the moving average. So we read the charts, and that's exactly how it works. I'm going to remove this risk to reward, and let me clear out a couple of drawings. Okay, now you know for a fact that the price is going to certainly catch up with the moving average that happened. If you are a scalper, we could also use this strategy for scalping. I have another beautiful scalping course that's set to be on a 2 minute time frame, and it is only based on one chart. Okay, and that's a beautiful another setup where you could also scalp, using the same triple thread. You could also scalp. These are all small scalping moves which you could capture, because I've been observing this market for quite a while. I know how the price behaves after moves like these, right? A huge move to the downside. Now 8 out of 10 times there's going to be a follow through move like this, and maybe a couple of times there could be a sudden reversal back again to the top. But we always take high probability and high likely patterns and setup. So this is also a likely setup where the price is going to catch up with the moving average, right? And it exactly happened. No, it not a point lower or above. It moved exactly close to the green moving average, as you could see, and it reversed from this point. So you could also capitalize on this move, right? Considering the risk to reward, it doesn't have a huge reward because the price could stall at this point. But this being a non-location, right? It's a no man's land, so the price may not stop and may go below this if it reaches to this level, right? And as you could see here, you have room for the price to move down to the day's low, which is right here. So you could take a small trade, maybe half your lot size, considering the pattern right here, and you could have very well captured a small trade. But this again is an optional trade. Your main trade was this one. It was a 1:4, and this was a decent trade, 1:2. You could have taken this trade, but anyways, this is not what we look for main setups. Look at the next move when the price actually swiftly moved down and made a follow through move, right? You could see the price moved way lower from the previous low point, which is here, right? And look at the trend meter. The trend meter barely moved downside. At least on this particular chart, the trend meter moved towards down, okay, slightly below the previous low point, but this one was kind of stuck. And look at the kind of major location right here, which is the previous day's low. Look at the participation on both these charts. You have all three participants entering, which is a very rare scenario. You only get to see these three dots appearing, during the opening, right? Because that is when a lot of people, enter into the market. All kinds of participants enter into the market. The three dots right here, the black, blue, green, right? It's a very rare spot, right? And looking at the trend meter, looking at the location, it is just 10 points away from the previous day's low, which is a major location. And post this particular move to the downside, there's always going to be a catch up to the upside, right? And this participation, look at the next candle that's right after this, right? There's a huge bullish candle. It's kind of engulfing, and this is a very famous setup. Like you have a bearish candle, then you have a doji, right? Sort of a doji, and then you have a bullish candle. Now that's moving above the second candle, but in this case, this bullish candle even moved above the bearish candle right here. The three candle setup, which is called the morning star pattern, and all this, like in the location, the participation, the trend, and along with the candle pattern, right? It's a very clear indication that the price is going to move higher. So are we going to get into a trade right here? No, like I said, I'm not an aggressive trader. I'm a conservative trader. I still want the price to go and catch up with the moving average because the price made a lower low, right, from the previous low point in both these cases. So I need the price to go. have a pact with the moving average, and then see the kind of reaction around this moving average and get into a position right here. You know for a fact that this itself has given us indication that the price is going to move higher, but still a second confirmation is required because this is not a simple move. It is a big move to the downside, and I need to make sure that the move to the upside is kind of obvious before I enter into a trade. And that's exactly what happened. I was Let me clear out the couple of drawings right here so you could see the candle that I want to talk about. Next, okay. So after post this particular move, right after this candle that actually moved above this candle with huge participation on both these cases, right? The price moved to the green moving average. Look at this particular candle, which is sort of a reversal hammer, right? This is the kind of reaction the price would have when it reaches the moving average. But you do not have significant participation, neither the volume was not there, and the next candle was kind of immediately moving above the spin candle. So this candle's high, the pin candle's high is my entry, and this candle's low is going to be my stop loss, right? So this is going to be my entry and stop loss. So, and I know for a fact that my first target is going to be, I'm going to look at the blue moving average, right? And see the kind of reaction. But I'm going to trail my stop loss to the green moving average, and my target is going to be the black moving average. You know, that is my target, and I'm going to be booking profits, or I'm going to be taking some kind of like lots away when there is a stiff resistance at this point, which comes with a huge participation, or if there is a volume candle, right? So the price moved, and as you can see, it's a strong move from here, and I'm going to trail my stop loss because the price swiftly moved above the blue moving average, confirming that the move to the upside is kind of strong, right? And then there's going to be a dip, obviously, right? The price moved back into the moving average, and then boom, it moved into the black moving average. And as you could see, the moment the price was into the black moving average, look at the trend meter. So this is where we tend to take profits, right? When the trend meter gets into the red zone, as you could see, and there is a participation and the location. Again, three conditions for exiting a trade: location, right? Participation, and then the trend meter. And look at the candle pattern: a reversal hammer, kind of a reversal hammer, right? With a volume that's giving us a strong indication that the price is seeing some stiff resistance at this point. So it's a beautiful trade again that we took based on the facts. So it's a long position. Maybe the risk to reward is not as great as the previous one, but it's a decent trade as well. Okay, so look at it. The risk was 15 points, and the reward was about, we could say, let me keep it here. The reward was about 53, 55 points, like odd. So it's about 1:3 ratio, right? So it's another beautiful setup, easy trade. 1:3 ratio is what you got out of this particular trade, right? And it's again, see, you have all three entry conditions, where you could have taken a short entry, but we do not get into trades in a haste. Like, you always wait for second signals, especially when the price is above all three moving averages, right? And at this point in time, you know that there is a strong resistance, but you want the price to actually give you a second confirmation. So as you could see, when the price is mixed, when the moving averages are mixed and the prices between these mixed up moving averages, it's gonna get choppy. You could see the price action right here, right? See, it actually moved down, that actually moved up, right? Then it's kind of chopping down again, so it's making a lower low, right? And then it moved swiftly back here. So you don't want to get into positions like this, right? Where you don't have a clear indication as to which side the direction the price is about to move, because the price made a strong move to the downside. The price has actually moved, really strong, to the upside as well. Now this is the kind of lower high which is broken by this move, right? So it's this pattern is not as clear. If it is actually moving like creating lower highs, it's very obvious that you could actually buy get into a short position at every time the price raises. But in this case, the price moved above this previous high point, right? So it's not quite obvious as to which side the market is going to move towards, right? The next move is going to be either to the downside or the upside. We don't have a clear indication. Hence, the trade right here, even though the conditions are met, we do not enter into trades like these because the probability of price moving higher, is equal, to the probability of price moving lower as well. Okay, but looking at the entire day, you are bearish. You want to get into some bearish positions based on how the price action, or the price behavior, you know, when the price moves towards the day, right? So let's look at how the price moved after this. It actually got back into the same zone where there was strong buying, and you could see some participation, some volume that's coming in, right? And the trend meter is back into the green zone, and for a fact it's going to move. Like I said, there's a scalping strategy or a setup which I've actually formulated on a 2 minute time frame. These are all small scalping opportunities which you can easily capitalize on. It's a same triple threat strategy based on these three indicators and conditions, but it's going to be on a 2 minute time frame, and you can actually capture even better moves, right? Quicker moves. You don't have to wait for high probability setup on a 3 minute, but rather on a 2 minute, you could easily see even better trades, right? Small trades like these, which you could easily capitalize on. But okay, let's not talk about the scalping now. This is going to be a pure day trading, right? And so you always look for high probability setup. So you're bearish, and you could see that no price again moves low from this particular point, creating kind of no lower. So you always wait to see if the price comes back to the moving average and shows some kind of reversal. And exactly that happened when the price swiftly moved back into the moving average. You could see there is a volume candle, and you could see there is a beautiful candle that's again pinning down all these three moving averages, right? And the trend meter is almost moving higher, and in this case midway, and the moving averages are sliding or sloping downwards, and it's a kind of a downtrend for most part of the day, since 11 o'clock in the morning. So you take your chance here. As you have a scope of the price moving back to this level, right? A good scope right here. And if you're going to trail your moving averages, considering the trend being to the downside, you could even capture a bigger move like this. Okay, so it's a beautiful move to the downside, and if you could see the kind of move with two targets in mind, right, you could actually know. Let me bring this short position. This is where I'm going to take my entry, right? And this is going to be my stop loss, the high of this particular candle. And my first target is going to be this, right? As you could see, the price swiftly moved, making a pin candle. And I'm going to take partial profits right here, which is my 1:2, right? Partial profit. 15 points is my stop loss. 31 points. At this 31 point level, I'm going to take some profits. And then I'm going to trail my stop loss and take the remaining profits, right here when the trend meter gets into the green zone, as you can see here. So it's going to be a 68-point move. Overall, it's another beautiful 1:4 ratio setup. And this exactly is how you take trades based on facts. You stick to a plan and you trade the plan. So we had taken three trades for today, right? The first one being this right here. The second one was right here, right? And the third one was this. In all these three cases, the risk was limited to one candle, right? In this case, it was this one, right? And in the second trade, it was this candle, and it was this candle on the third trade. So this is exactly how we take trades based on facts, based on the signals in conjunction with the price action pattern and candlestick pattern, right? We stick to the plan and we execute every single trade as dictated by the strategy. So we discussed a lot about the price action pattern, based on the opening analysis. For the first 30 to 45 minutes, we simply observe the market moves, and then we get into trades based on all these facts that we just discussed in this particular video, right? Please do go have a look at other videos. I've discussed about different kind of setups and patterns, on the other videos. And this particular video talks only about the price action behaviors for this particular day. There are a lot more setups and behaviors that we have discussed in the previous videos. Kindly go and have a look at those. And if you like this particular content, please do like this video and subscribe to my channel to get timely notifications about any videos that I post, right? And I have formulated a course that's called Triple Threat Intraday Strategy course, right? Please do contact me to get to know more details about this course. It's an end-to-end course targeting beginners and experienced traders. It's a private one-to-one session, and I could tailor the content based on your experience and expertise in the stock market. and we could discuss a lot about the strategy. The custom indicators are built to be used on this Nifty chart. It's not available in any charting platform. And along with this course, you get these indicators absolutely free with lifetime access. You also get 90 days daily charts, the 3 minute time frame charts, the ones that we are discussing, with all these entry and exit signals clearly marked. And you also have these video recordings along with the charts. And this webinar, or the course, the online course, right, a private course, is going to be a deal breaker, because you can get started with trading no matter how many years of experience you have, right? And you can easily start making some good profits after 30 days of getting accustomed to the setup, back testing, and then gaining confidence. You also get 30 days of support right post the webinar to get your questions answered and doubts clarified. And you can get independent so soon, with all this information that you're going to get from me. So I've been looking into the markets for over 10 years now, and I only look into Nifty and Bank Nifty and not anything else. I've formulated many strategies in the past, but over the years of me looking into the markets and trading, I've only used these three indicators a lot. So I've actually fine-tuned and refined and narrowed down the scope of the technical aspects to these three indicators. You know, and what you're looking at, this particular strategy is a very optimized strategy with minimal flaws, right? And you don't actually get into trades where you make a huge loss, because as you know for a fact that the loss is limited to one candle. So even if you get into a trade by error, that error is limited to just one candle, right? Because you're going to stick to the plan, and you're going to execute the trade based on that particular plan. So the course is going to talk about the charting platform, on how to set up these indicators and all the price action patterns. It's going to be very structured, very organized. You're going to get to know topic wise, right? All the price action patterns at once, all the candlestick patterns at once, all the setups, right? We discussed a couple of setups in today's video, but there are quite a few setups as well. So once you train your brain to know all these setups, and once you look at the chart, you will be easily able to spot these setups and get into trades based on the indicator signals as well. Okay, so please do contact me, at my WhatsApp or email ID to get to know more about this course. And of course, please subscribe to my channel to get notifications on any videos I post. And I look forward to hearing from you. And until I get back to you with another video on Nifty chart analysis, it's bye from me, and take care of you and your loved ones, and have a wonderful weekend. Bye bye.